Okay, welcome everybody to this evening's ACY Securities webinar, Forex Trading Live Market Analysis. That's what's coming up tonight. Coming up tomorrow, we'll be going into support and resistance, looking at it across multiple time frames, how you should be assessing it correctly. That's tomorrow's webinar, all about support and resistance, 7 p.m. Sydney time. And on Thursday, we have another webinar, which is live Forex market review, 7 p.m. Sydney time. So that's what's coming up, Tuesday, Wednesday, Thursday. Before we get into tonight's webinar, if you can read through the disclaimer, if you're on our YouTube live stream, I cannot see your chat. I've given you a link there. You can join us in the webinar if you have a chance to register and jump on board with us. Other than that, everybody else, please read through the disclaimer. Any questions, you can use the webinar chat or the question and answer box. So I'll just let you read through that. All right, let's move along. Now, if you don't know me, my name is Duncan Cooper. I'm a senior market strategist and trading mentor here at ACY Securities, and I'm a full-time Forex trader. Been trading in the market for more than 15 years. Mentoring clients for more than 10. If you want to contact me, my email is there, duncan.cooper@acy.com. And through the week, you can get my analysis at our website, acy.com market news tab, or on our YouTube channel, ACY Securities Australia, and you can connect with me if you want to on Twitter and LinkedIn. Those are my handles. As well, through the week, you can get access to our Telegram channel, posting analysis through there. Just contact Nathan Bray for access. I'll put his details in the chat in a moment. If you want to get access to my chart layouts and templates for MT4, just contact Nathan too. If you want to set up a demo account, he can do that for you as well. Or if you've got questions about a live account, he's only too happy to have a chat. Or I'm trying to put that in the chat at the moment. Not sure the chat box works. There we go. Wasn't sure the chat box is working. So there's Nathan's details. Just follow up with him if you have any queries. As well, on Wednesday, tomorrow, after our webinar on support and resistance at 7, we've got the Inner Circle webinar at 8, where account holders can come on the mic and ask me questions about trading, or can be asking me and Nathan about trading. So if you're an account holder, contact Nathan to be able to come on the mic. Other than that, if you're at the webinar at 7 o'clock, you're more than welcome to move along to that webinar and have a listen in. And we might answer your questions if you're typing them in. But Nathan generally just lets people on the mic who are account holders. But you never know, he may be flexible. So if you want to trot along after the first webinar, you might get the opportunity to have a chat with me one-on-one. Anything to do with trading, what we're talking about. All right, so that's what's coming up. Now let's get into, first of all, the news for the day coming up. At 10:30 p.m, we've got Canadian CPI data, US retail sales. That's what's the main event. We've just had the Eurozone economic sentiment just released. So what's that done to the Euro pairs? Not too much. It's actually going up fractionally at the moment. So trading the dollar card, I wouldn't be doing that before that news event comes out. And we do have the retail sales to notice there for the US side of things. All right, let's get into the charts now. We obviously had quite a positive US dollar week last week. Just having a bit of a correction at the moment of the move up last week. Is the day chart of the dollar index. Weekly view, we may be at the bottom of the range here, and can we start to move up? Day trend here for sure. We might, we may get a pullback, like a 62% pullback here. Put in another bottom to move up. So, and let me just pause a moment. Might not be able to see the charts. Let me just reassess. All right, can we see the charts now? All right, Warren, you let me know. All right, you can see it now. All right, let me just backtrack. Technical glitch at my end. So just on the news front here, 10:30 p.m. my time, Queensland time, we have the Canadian CPI data coming out and the US retail sales. Okay, so just make note of that. We've just had the release of the German ZEW economic sentiment, which is just popping the euro up. I can just see it on my other screen. Now, we can go to the charts. There we go. All right, so dollar index, just having a pullback there on the daily. We've been getting some support down there on weekly support, 101.28. So we might get some form of pullback within last week's move up. Okay. Doesn't mean to say that day chart's changing at the moment. You know, nothing really goes up just in a straight line without having some form of pullback. You know, a corrective pullback can be 2 or 3 days. This last move here consisted of about where 1 day pullback, 2 days up. This is kind of a 1 or 2 day pullback at the moment. All right. S&P 500. Nothing going on here at the moment. We're just at the weekly highs and it's very stale. All right. That area that I've got covered in, had it covered in for quite a few months now, those weekly tops. We're at the 79% level of the monthly range. And we're just kind of hanging around there. It's not really offering the best trading at the moment. A little bit mixed there. All right. If I was trading something, I wouldn't be trading the S&P 500 at the moment, but it is holding at the 79% area, those weekly tops. So it is at resistance, but it needs some impetus one way or the other to, you know, kick into a clear trend. What is it going to be doing? So we were definitely seeing US dollar strength last week. We did finish at the high of the week and on the pairs to the US dollar at the low of the week. So let's get into the euro dollar first of all. That's just moving up, just moving into the zone that I highlighted earlier in the day that I posted out on Telegram. So let me just get rid of that color. Yeah, here's your day chart look. Clearly moved structurally into a downtrend here. And I've been saying on the weekly chart that this is last year's trading range and we're potentially fading up there at the 79% level. We've been topping out at the 110.33 level, that weekly high, for the last 1, 2, 3, 4, 5 weeks. 4 of those 5 weeks we kept rejecting that level and we broke down last week to a lower bottom. So this is potentially coming up to form maybe a lower top. And we could hold at any one of these resistance levels, moving towards the first one here at 109.09. We're still trading within Friday's decline, and the next level up is at 109.42. So I was looking pretty much where we're at the moment, 109.00 up to 109. I was actually looking at this 4-hour range here. 62% level, 109.00, 109.09 is the day resistance level. So from the 4-hour to my 15-minute chart here at the moment, just going to squash it in. There's Friday's trading range. We're on trading in whatever occurred on Friday. We're just trading in that range at the moment. So whilst I had a bit of an inside day yesterday and we're up today, we're still in the range of high to low of Friday. 62% levels at 109.00. Haven't quite got up to the 109.09 day resistance level. And we're into the red pivots, which have a sell bias. So I'm just watching this area as an area where we could start to see an intraday failure, depending on what your mode of operation is. If you're wanting a long-term positional play, I mean, you could be looking at maybe selling at 109, stop at 110. All right, I actually got short at 110, stop at 111. So now I'm risk-free. So just need to look for whatever your setup is, whatever you need to see on the chart, maybe at this area, tell you that you want to sell. Or maybe you want to wait and see if price can, get up to the next level, 109.42. All right, just have to decide where you think a good level is. That is a good level. If we looked at the whole range of last week, if the market wanted to have a much deeper rally, you could look at the 62 level, 109.73, the 79% levels at 110.08. It's just a question of, does the market have enough legs to get up to those levels? So at the moment, it's contending with the first level. So if you see a setup that you like to sell, then this is your level. Okay. Euro yen. Now, if we go to the monthly charts, this is last year's high just here. We're back underneath it. And we also folks broke this 2014 high, I think it is. So folks breaking some highs. Weekly, 2-week decline at the moment. Day chart here isn't a downtrend. That's could be a strong level of resistance now, 148.39 over there. Draw a fib in there. And there's a day chart resistance level just there at 148.62. So on the 4-hour chart, that fib is drawn across last week's range, last week's candle. I did notice that the 79% level lines up very nicely at 4-hour resistance, at day chart resistance. So there's your day chart top. Got a 4-hour top there where we failed last week on a test of that level. So that would be a great level to look at, 148.59, 148.62 up there. And that whole area where we failed last week on a rally too, which was monthly and day resistance there, 148.39 up to 148.62. Can we retest that area? Now at the moment we're holding at the 62. Maybe we just going to hold at 62 of the weekly range. You have to decide, you could as if we're going to have a week down this week. So that was the candle of last week. Maybe we're going to hold at 62 level. So maybe then the candle of this week comes in here to move down. Or, we could, of course, come up to the 79% level to put the high in for the week. So you just have to work out what level you want to watch at and decide to jump in. Of course, you can see a lot of 4-hour candle tops there at the moment, holding at the 62 level here. So maybe we put in the high of the week just there. But if I had a choice, I would look for the high level, but price might not give you the high level. So you can determine right now if you want to just click in at the 62 level, put your stop above last week's high, or you could wait for price to come up to this level, look to sell, stop above last week's high. Or you could look for a much more of an intraday entry technique. 15-minute chart at the moment. So let's say we have topped up here. At the moment, we're spiking into the 79% area of this smaller range. We've got the figure there at 148. So 79% levels at 148.05. So that area there could be a sell zone intraday at the moment, especially if the euro dollar is going to hold and start to withdraw back down below 109. It's trading at 108.98 at the moment. So that could be a good level to sell at right now with limited risk. You could be selling here with very limited risk, stop above the high. This could be the high of the week. Or you could be selling here, putting your stop above the high of last week, depending on how much room you want to give it. You want to be a lot more flexible and give the market a lot more price action to chop around and not take you out and stop. All right. Let's look at the pound dollar. Now, we did drop down on poor UK data before, but we have popped back up. So we're getting some support at the moment on top of this old double top. A very negative week last week, almost an outside candle, came down to this double top. I mean, that double top could hold to just trade all the way back up, but held at weekly resistance up here, 126.67, and that was a very significant reversal week. Usually when we have a reversal week like that, we get maybe another week or 2 or 3 or 4 down. But the market will always be right. So at the moment, it is holding at that weekly top, or monthly top at 124.48. So short term, Friday traded down there. At the moment, we're coming back up. So I'm just measuring the range of last week. I put this out earlier in the day. 62 level lines up with the daily resistance level, 125.83, 125.86. That's my desired level at the moment to look for the market to get to look at manufacturing a possible entry. Now, the market might not give me what I want as well. If I just color it in, or back to the daily, these 2 tops here to the left, back to my 4 hour, I just highlight those 2 tops as an area. Then the high of the current candle is pretty much at the top of that second high. Price may not want to move above these 2 tops with any conviction. All right, so with that being said, that top there is Friday's high. We may just like folks break Friday's high and not be able to get above this top, 125.46. And then we may start heading down for the week. My preferred level is up here. Now, if this starts to move down and wants to start to trade back below 125.00, that may be the signal that, okay, we can't get up to 125.83. All right, so at the moment, I'm just waiting to see if we can get up to 125.83. However, if this, even this area here, all right, yesterday's high and these 50-minute tops there, we start to move back below those tops and start to want to hold, there's a pivot point here at 125.29. If we start to break below here, maybe we can't get up to the high level and we're actually faltering at those day chart tops to the left that I was just discussing. All right, so at the moment, it's trying to go up above Friday's high. Friday's high, I could put Friday's high in there. You could use Friday's high as a reference point. Right now, it's not on the last 50-minute candle, it can't close above. So we're not committing above Friday's high at the moment. If you're looking for a very tight intraday trade to get in, then you could be selling at Friday's high with a 20 pip stop. Of course, if you're wrong, you're going to lose 20 pips, but that would obviously give you a very good risk to reward if we're then moving down to challenge the low of the week. So I'm watching for the high level at the moment, but if I start to see price break down, if it starts to want to, over the next 24 hours, get back below 125, we're probably putting in the high of the week in this area here. So, look for your setup. What do you need to see to sell? Of course, when the US retail sales come out, we may pop up a little bit higher. So at the moment, moving back below 125 isn't real good for the pound. And that probably means that we can't get up to the high level, which is up here at 125.83. So let's just watch to see what price does over the next hour. Does it start to break down from up there? It's likely saying there's some higher imbalances. Yeah, there's a definite imbalance to the left there. That's why I'm looking at the high level. We've got this imbalance here. But we did finish very negative on Friday. So whilst we're having a little bit of a pop-up at the start of the week, we could fill the imbalances or maybe we don't. We'll just have to wait and see. I always, the very logical level is up here, 62% retracement, the day resistance top over here. That's actually last month's high as well. So there's lots of significance there that could offer clear resistance. And before we dropped down there with that imbalance, we did fill an imbalance before we dropped. So that is the most logical level that I would watch for. But sometimes price doesn't get as high as you want. And then, you have to start to assess, is price going to get there? All right, pound yen. Last week, you see, once we've hit the monthly resistance at the top, 2 weeks ago, we've had a 2-week decline. We are sitting on weekly and monthly tops here. Monthly over here, weekly here. Structurally, you could say it's still in an uptrend, but I don't like the fact that we failed at the monthly tops up here, especially with the pound dollar selling off, last week. Are we holding up there to reverse? Day trend is down, and at the moment, that's a range of last week. We've been up to the 79% level. So as I was saying on the euro yen, there's the range of last week. Are we topping out up here at the 79% level to put in the range for the week down? So are we topping out the 79? Price might just come back up to the 79% level for you. Trade down, try and break down through supports. That's how the structure is kind of unfolding there from the day chart. So are we feeling at the 79% level there to move down? Might come up for, might give you another opportunity for a test there at 170.45. On the 15-minute, looks like a 79% rally. Here's 79%, very similar to what we were seeing on the euro yen. Just flip back to the euro yen. See that? If you were quick there, so you're dropping, and the euro dollar is starting to move back below 109. All right, so two of those yen pairs there could be holding at the 79% levels, covering the price action that's been forming late yesterday into today. All right, moving into Aussie yen. Now this Aussie yen, bigger range, 79% level is where we're potentially holding at. You can see there it's got higher tops, lower bottoms. Sorry, lower tops, higher bottoms. Get the right way around. So it's a little bit mixed. But we've started to hold at the 79% level. This rally up here isn't getting to that 79% level. And last week, Aussie yen loves the 79% levels, okay? Last week, we're at a 79% level failure here across that range. 3 days gave you opportunity to sell at that level or within a pip or two. And now if you look at last week's range, let's drop to the 4-hour chart, that's the last week's high, last week's low. We've almost been up to the 79% level of that range, been a fraction short. All right, so it's a bit choppy, this one at the moment. I'd much prefer to be selling a little bit higher up if you're not already short, because it is a little bit choppy. So, if we can get up to 91.42, would be ideal, but we may not get there. So a little bit choppy at the moment. I am already short from a little bit higher up, so I'm not too fussed about taking another trade. But if I was trying to get in, I would much prefer to get up to 91.42, because the fact that we haven't been up to the 79% level just puts in my head that maybe we still need to get up there. So it has filled a little bit of an imbalance area here. So maybe we have topped out there. But at the moment, we're sitting on this daily top here, and this is a monthly. The fact that we moved above that top and this line here, which is monthly resistance, you're trading back into an area of possible support here at the moment. So that's why I'd much prefer to be selling up here, and then you can let price trade down to support and then ask support to break. I don't like to sell into support, so it's just into a support area there at the moment. All right, so I'm not looking to do anything on that pair at the moment, but yeah, the 79% level there would be a better option if you're looking for a short, in line with this range here. I've been discussing over the last week or two. Are we failing up at the top here? This 79% level for a move down through the month. Choppy at the moment. because the Aussie dollar generally has been moving down and dollar yen's been moving up. So that's why we're getting that choppiness. Right, Aussie dollar, just so we know what the day chart looks like, had a brilliant failure up at the 6,800 level last week. Hopefully somebody got short up there. Now it's just asking the question, it's gotten close to support down here, 66.29, weekly support over here, day support 66.19. It's still kind of range bound. We could have formed maybe a double top, but we're still in a range here at the moment. Now, if we can unravel to the downside, we may get like a double top price rejection, 63.41 down there. But it's the question of, can we break out of the range? All right, so do we have a double top? Can we continue the momentum of last week down? Right. This top just here, 67.17, which is the middle of the range kind of. We can't quite get there, but we maybe could stub into that top on some US dollar news later. So to the 4-hour chart, we're just being at about 10 pips above 67 at the moment. Maybe 67. You see a 4-hour area of resistance there at 67.03. See how it dealt there on the way down as resistance, and it's holding across through there. So on any volatility, I would look at 67.17 up here as an area of resistance where we could fail. There are a few imbalances though that the market could want to fill. So as we're looking to the week ahead, there are a couple of imbalances there. Now the market doesn't have to fill those. Say the imbalance we formed here, and price action last week came down. The big imbalance was there. That was the initial imbalance. Look where it came to, just to fill it. Now we still have a lower imbalance down here. So the market will be working out, is it coming down to fill that imbalance, or does it want to first of all come up and fill these imbalances? If it wants to go up and fill those imbalances, then drawing a fib across the last week's range, then we could be coming into the 62 to 79% area up here. We've got daily resistance over here at 77.10. So, there's an imbalance there that could get filled to come up to 67.71. So, sometimes when you look at a pair, it's dead obvious. It's like the pound dollar. There's a dead obvious level. On the Aussie there's a number of levels where the market could decide where it wants to park itself to maybe put in a lower top this week. So I'm short up here from 68, so I'm not looking to short it myself. I'm just hoping it doesn't have too much of a rally. But I would be watching over the next 24 hours, 67 up to 67.17. What happens in that area? Do we get back up there and fail once more? Can you see a tight entry to sell? That's where I'd be looking at the moment. And that's assuming we can get up to there. We've obviously been selling down today. Get my right tool. I want my fib tool. Maybe all we can do is come back up to the 79% level that overlaps with 67 there. And then fail. There's a little bit of an intraday imbalance that's been forming today. And because we had an outside there, I tend to draw my imbalance from the top. So that's what's left of the imbalance. So if we fill the imbalance, yes, we would get up to the 79% level there. So if we can't take out the high that we've been forming today, we may come up to fill that imbalance. So you can watch up there for a higher price point if price can get it up to there. Now the euro pound, it's doing its normal thing. It gets very rangy. It's in much more of a trend though, down breaking below weekly and monthly support areas through here. 87.18 to 87.22 is a weekly hold support area. And now we're holding at that there. And we're actually almost spiked up there today. So the perfect scenario would be price comes up to 87.22 area, or even last month's low, 87.29, and then comes up for a spike, holds there, and gives you an opportunity to trade up there. Spike down in line with the day chart trend, and then can we break this 86.69 weekly support level? All right. So that's what I'll be watching for. Within the little bit of consolidation we're forming here at the moment, we'll look up here for failure against all these previous lows to be a resistance. All right, cover the euro yen, but that's maybe fading up there at the 79 level I highlighted. Euro dollar's still well, it's holding at 109. If you want to trade at 109, it's pretty much there. Or if you want to wait, maybe you want to wait till the US news comes out. Could go up a little bit higher. All right, I just want to see what these are doing, as we've already covered those. All right, New Zealand yen. It's in that weekly area that I discussed this morning, if you caught the video. 2 weekly charts. These weekly tops here. Look at that weekly. So there's a weekly rejection. Whether it's a strong day chart rejection or a weekly rejection, I just then draw a fib across that range of the candle and look ideally to the 79% level within that candle range. Now, it might not get up to the 79% level, or it's managing to do today is get in between these 2 weekly levels of resistance here. As well, across the monthly range here, we're at the 62 area. So we could be putting in a major monthly top here, a lower top to that top for a move this way. And we've been in consolidation for a long time. So if we did get a break to the downside, we could see a strong break to the downside. All right, so a weekly rejection last week. Day chart, so it is in an uptrend, but it couldn't hold up here. And 62 levels at that weekly top, 85.20. What I want to do is draw a fib across last week's high to low. My perfect level would be up here at the daily level of resistance, 85.40, and the 79% fib. But price might not get there. It's holding at 62 in between these weekly levels of resistance. So the weekly area of resistance is this band here. The daily top's there. The daily top lines up with 79% level. I always go for the best level if I was trading, but maybe we can't get up to the best level because it is holding at weekly resistance there. So if you want to trade that pair, I do notice as well, for those that love the imbalances, we do have an imbalance at the moment that hasn't been filled. I'll just get rid of that box I just put in. There's an imbalance here. I'm going to go from the top of the candle there. So if we want to fill the imbalance, if we drop it down to a 1 hour chart, we can probably then just refine that. All right, so from a 1 hour perspective, the imbalance is there. A little bit of it's been filled, but there's the 1 hour imbalance. Top of it's pretty much at 79. So I miss getting in all the time. I look for the perfect levels. You know, if I was wanting to trade this pair, my order would be there. All right. Sometimes by being patient, it can spike up and just take you in. Other times, we can see here at the moment it's holding at the 62. So, you know, if I was looking for a trade, I'd be looking up there. What I can see is, like I was discussing on the euro yen and the pound yen, 79% failure there, and we're already trading down. So maybe we have already put the top in. and we're trading down from the weekly resistance level. All right. So you can either decide that you need to get in now, if you want to trade that pair, or you can be patient and wait for the higher level if the higher level can come around through the week. The beauty of being patient and waiting for the higher level is that it gives you better risk reward long term. All right. Of course, you can miss out, but I don't have a worry about missing out. I don't have this fear of missing out. I know statistically I'm going to have wins and losses. So having a better risk reward helps my overall profitability long term. All right. But, you know, a number of pairs are playing at the 79% levels intraday at the moment on the yen crosses. So New Zealand dollar. All right. Another perfect failure last week. Ever there was a good trade, you know, good week for trading last week. Aussie dollar, New Zealand dollar did offer you perfect sales at resistance last week. Now it's down to day support at the moment. Is this a long-term triple top? Are we seeing, so from that triple top, if I take that high to low, so the height of the pattern down here, 57.79 as a target. These triple tops, I can use that top or that top, but two tops there for triple tops. Let's just call that a double top cross like that. Double top, triple top doesn't make any difference. All right. I'm using the first high to correct the projection. It's down at 57.79. I could use the middle high. It'd be a little bit shorter. All right. Now, at the moment, we're getting a short-term bounce on day support here. Now, we could come all the way back up if price really wants to. We could come up this week to 63.14. We could come all the way back up to the highs once more if price really wants to do that. All right. Hopefully it doesn't, because we had a very nice strong sell-off Thursday, Friday. Hopefully we're just having a little bit of a bounce on support. So let's look at the range for last week. All right. Coming up to retest daily resistance, 63.14. There's your 62 level at 63.05. So that would be another very obvious level of failure. At the moment, though, just having a look at some imbalances here. So there's a number of imbalances. So we could certainly want to trade up higher to fill some imbalances if we really wanted to. That's the highest one up there. All right. I guess the question on all these pairs to the US dollar in the early part of the week, and the euro dollar is back below 109 at the moment, is with a very strong sell-off last week, is that overall momentum that we saw down last week going to continue in the same vein this week? And if it does, you know, one of the things to measure is how much of a rally we get back up within the range of last week. From a perfect level, this would be great up here. We can't really get above the 38 at the moment. If that's as much as we get as a rally at the moment, we will probably break this low this week. All right, because if we can't rally up too high, that just means the sellers are coming in really early to want to engage and push this further lower this week. Now, I never really trade at 38 levels. So for me, you know, if I was looking to short this pair, it would be up here. But one thing I have noticed today is 62.50. That's 62.56, but we are kind of topping out up here at 62.50. Maybe 62.50 approximate level is as much as the pair's got. Now, at the moment, I'm always concerned that we've only had a 38% rally and we may need a higher rally. So at the moment, I will be waiting just to see what the day brings. If we end up with a very negative today, you know, so we trade down today. Let's say we trade down from here now, down today. I would be a lot happier then tomorrow drawing a fib across yesterday's range and then looking to the 72 to the 62 or the 79% level of the range that gets formed today. Selling at the moment on this pair because it hasn't traded up that high is a concern to me. But if we had a strong day down today from the high of today, then I could get more into the idea of, okay, we may have already put in the high of the week now and look for a sell. So at the moment, I'm just, sitting in my hands on that pair. It could go higher at the moment, up to the kind of 63 area, 63.05 up to 63.14 that could get to, depending what the US news does. If the retail sales aren't that great, that could easily pop up another 50 pips. All right, dollar Canadian, of course, we've got the CPI data. Now, from a weekly perspective, this is rather consolidatory. We'll just get rid of these two lines. Weekly, monthly support down here, monthly, weekly resistance up here. And we're sitting in the middle, so that's not perfect from a trader's perspective. All right. It's got a little bit more of, I think, an upward bias to a downward bias. We keep putting in high bottoms on the weekly chart. Bottom, bottom, another bottom. This could be another bottom here. And last week's candle was very positive. So I'd be measuring the range of last week's candle at the moment. See, we fell at daily resistance. There's daily support. Range of last week is there. 62 level overlaps with the daily support. So that would be my area. I don't know whether we can get down there, but the CPI data might give you a quick rush down there. That would be the level to watch. 134.10 to 134.06. And there's a few, few imbalances here that could get filled. Price may be coming down to fill these imbalances too. So watch 34.10 down to 34.06, down to 3400. Okay. For a move back up. Assuming you can get that deep. Dollar franc. In my video today, I said we closed above this monthly low here last week. We've been chopping around that level, closing above, closing below, closing back above last week. Can it be support this week? This week for sure to move higher. So we're testing it today. We are structurally in the higher bottom, higher top. It is still very consolidatory here, but there's a 62 level there. And there's your monthly level. There's 4-hour support here. Okay. Out of pairs to trade, I can find a better pair to trade. But if this is the only pair you trade, that's the level to watch. 89.26 is monthly support potentially now. We've been false breaking it. It has been resistance. Is it now support to move higher? Day chart trend has turned up. It's not as nice as, say, the euro dollar. So if I was looking to trade a pair, this one or the euro dollar, I'd probably go the euro dollar, but you could be watching this level here. You could be watching for some form of trend line break. We've actually, can actually draw a trend line just there. Get a good close on that trend line, closing back above support. That could be the low of the week. Just need to make a decision. What do you want to do? Now you could wait till tomorrow. So let's say we have a nice day up today. We get a nice day up today. Then simply look to buy a dip within the range of yesterday's candle when we're into tomorrow, to then trade up from a dip within the range of the candle, assuming we move up today. All right, so you don't have to be trying to bottom pick. You could wait for the day to move up today and then look to buy a dip tomorrow, if that's what unfolds. All right, but it's looking like it maybe is getting support there, so you can make your decision. Dollar yen. Now we have moved above the significant monthly top. The significant monthly top I'm talking about, squash monthly chart in, it's this top over here from 2002, I think it is. 135.16, we've been holding below it or at it. We are above it at the moment, so we're moving higher. Weekly trend's a bit mixed. We have a higher bottom, lower top at the moment. Day trend is up, but the mix on the weekly doesn't excite me too much on this pair at the moment. But if you want to trade this pair, we've been holding at or underneath 135.16 and we've broken above. So all these 4-hour tops here, that would be the area to watch for support this week. If the buyers are holding this in control, that is the area that needs to hold now. The area that was resistance should become support. So I watch 135.16 down to 135.00 to be support. We've already traded above last week's high as well. Just putting it from last week's low up to the new high of this week. So if you got down to the 62 level, you're back below your support level, which I don't like. So for me, that doesn't give me any good information. What I'd want to see is, if you want to be a buyer, 135.16 is your line of support. Does that hold? If it doesn't hold, then you may be then looking at 135.16 to be resistance as it moves back up to test it to trade down. That's a clear line. That's a clear level to watch. You're trying to construct a trade this week. All right, gold. It's not really breaking down. It has put in a lower top here on the day chart, but it's not really breaking down too much at the moment. There's your weekly look. We rejected that weekly top there. And that triple top up there. Are we forming a triple top on the monthly, which is also clearly seen on the weekly here? Are we forming a triple top up there? At the moment on the daily, it has formed a lower top, but we might have a higher bottom. We don't have a lower bottom yet. We can break through these two little bottoms here. That would be a lot nicer for the market. So gold at the moment could go either way there at the moment. You have a lower top and possibly more higher bottoms. So it is still mixed. I don't trade gold, but if I was, I would look up the high. I would look at 2048. This might get consolidatory here. I would look at 2048. My bias is to the downside with that triple top kind of formation. 2048, can price get back up to that level and hold. That's clear. That's actually clear resistance if you want to trade with the higher time frame pattern that might be unfolding. Got to get back up to there. All right. Are any questions? So the big question is, can the US dollar continue its gain from last week? I think, structurally, we are range bound on the weekly. We've been making maybe a 5 to 6 week base down here. At the moment, I'm just thinking, can we move up to top of the range? Of course, longer term, if we break above, can we move up to the high of the year? But at the moment, been consolidating for 5 to 6 weeks. The day chart is turning to up here. Can this structure now hold? If this really wants terms dropping down the 4-hour chart. That's the range of last week. It could pull back all the way within that, in that range to find support. Could come down to the 79% level, the 62% level. Hopefully it doesn't. Hopefully it just has a very minor correction. Well, for those that may be trading pairs to the US dollar short, you don't want to see, if you're sitting on a position, you don't want to see this pull back to the 62 or the 79 because that's just aggravating. But that's what could happen through the course of the week. We do reclaim the gains of last week before being able to move further up, potentially. All right, so there's more than the chance that that could pull back on the dollar index at the moment to the 62 or the 79, if it really wants to. We didn't have very good data last night from the US. If we review that, we had Empire State Manufacturing Index came in way poorer than expected. All right, so that helped price pop up on Monday. And of course, today we have the retail sales coming out from the US. So another little poor release of data today could see us pull back up there on the dollar index. We'll have to wait and see what the data brings. All right, so coming up tomorrow, we have going to go through support and resistance tomorrow. And if you're very good at support and resistance, you should have got a couple of trades away last week at least on, say, the Aussie dollar or the New Zealand dollar. Their highs, close to. All right. And really the focal point, as we're talking, I'm just talking about support and resistance now. That's tomorrow 7 p.m. Then we've got the inner circle at 8 o'clock. Just register your interest here if you want to come to that webinar. If you come to that webinar, you can move along to the next webinar. I'll give you a link in that webinar for the next webinar. But the euro dollar, the reversal that we've been seeing on the day chart here, has all stemmed from this weekly top, where we started to hold and fail, and the structure changed at that level. All right, so getting good at defining where the market's starting to not want to move above or below will certainly help you structure your trend direction, trade direction. Last Monday, it rejected 110.33 there, and then the trading day before on the Friday. So you could have easily gotten short close to 10.33 there last week to get short, just trading down from resistance. So getting good at support and resistance is the key in my mind. And, over the next couple of trading days, 109.09 or 109.42 here in the euro dollar could well hold the market. We haven't even been able to get up to 109.09 at the moment. You can see there, just from a dealing perspective at the moment, the euro dollar, we're not closing above 109. What's the pound dollar doing? Pound dollar is not closing above Friday's high. Okay. All right, so maybe 109 is calling that. And the 62% level of Friday's high to low. Now, if all we can do this week is just rally back up inside Friday's candle and then come down and break Friday's low. We haven't broken Friday's low just here, but minusculely start of Monday trading. If that's as much as we can rally this week, that's very little in terms of trading back inside last week's range. We could see, we do start to hold at 109, and we could definitely see this weekly high over here, 107.36 tested this week. All right, that's like, 200 pips, that's less than 200 pips moving down. We could easily see that tested this week. If we can't trade above 109 with any conviction Monday, Tuesday, and we start to sell off a little bit, we could easily get down to 107.36 this week. All right, so watch 109. What do you need to see there to get short? Right, I'll just leave you with that one in mind. Other than that, thanks everybody for coming along this evening. If you've got the time, look forward to seeing you tomorrow. Just head over to the webinar page and register interest, and we can have a good lesson on support and resistance. And then we've got the Inner Circle webinar at 8 o'clock as well. All right, everybody. So have a good trading week. Got a good start to the week. It's already Tuesday. I was just thinking that it's only Monday, but we're already into Tuesday. Before I know it, we'll already be past Wednesday and halfway through the week. We're almost halfway through the year, eh? All right. I'm going to leave you on that note. Have a great trading day. Thanks, everybody.